Hi there, and welcome to another episode of CryptoTime. My name's Antonio Shillingford, and I'm here today with Stephen Ierotheou. How are you doing today?
Very well, mate. Yourself?
Good. Put it this way, I can't complain. It's nice to be back as I've been away from the cameras for a while, so nice to be in the spotlight again. So throughout this episode, we're going to be talking through a few different topics. A lot of them are just technicals. So first of all, we're going to talk through Bitcoin, some of the technicals behind Bitcoin, and then of course we'll go on to BSV and some of the most recent developments that have happened on that project, being the real version of what? Bitcoin. Just before we actually tuck into that, please bear in mind this is just the opinions of myself and Stephen. None of this is any form of financial advice. So without further ado, would you like to kick off?
Yeah, sure. So one of the metrics I've been monitoring and what we spoke of before actually coming on to CryptoTime is hashing power, and using hashing power as like a proxy for determining the fair value of the assets traded. So when you compare SV, ABC, and Bitcoin in terms of their hashing power, you see that Bitcoin is way above the others with 96.4%. BCH has 2.5, which leaves SV with 1.2. Mm-hmm. But what's interesting is when you use Bitcoin and BCH as like a base layer and actually use those metrics to compare to SV, you see that SV is between 15 and 17% undervalued.
Yeah.
And that links in really well with your metrics.
Yeah. And just before we jump into that, just to classify for, of course, the viewers, what hashing power is the computing power that's being donated to the network to help process transactions and, of course, end of the day, add security to the network. Now, jumping into the figures of dominance now, of course, you spoke about hashing power, the percentages behind it. Now, going into dominance, Bitcoin right now has market dominance on the entire space, and believe off the top of my head, the figure is 68%. On their market dominance that they have right now. And of course, we've seen this fluctuate in the past. Prior to 2017, the dominance was a lot larger, but this is actually the highest they have been for pretty much the past 2 years in terms of the entire market cap, which is interesting to see. Of course, if you just match it up with your hashing figures there, people can expect dominance to start shifting, especially with a lot of the things that are coming out. And of course, we're going to talk through some of those reasons later on in this episode. But I personally do believe dominance will start to shift. Bitcoin, of course, at the moment has its day because it has what's called the marketing power and marketing presence of the space, which is also aiding to the hashing power that is currently built behind the network. But me personally, that is all I think it has at the moment.
Yeah, I totally agree. I think when you look at more financial sort of trading models or indicators, you can look at, techniques like mean reversion, and that can actually be tailored somewhat to actually trade dominance. So it basically says that you would always revert to the mean. And because we are at the highest point, there is a high likelihood that dominance will actually revert back to the mean, and you could somewhat translate that to a potential trading opportunity out there. So it's really interesting.
Yeah. Now, let's look at some of the reasons on why that would actually shift. So if we tuck into BSV now and we talk about the fundamentals behind it and the stuff that has recently been developed on BSV to allow proper adoption, which end of the day, true adoption and how much transaction velocity that you have on a network, which end of the day is pretty much density on a network, which is true value, because then that shows true usage. It doesn't matter how many utilities you build onto a project or an application. If no one's using it, it doesn't hold value.
Exactly.
Yeah? Now, of course, we just had the 2 gigabyte upgrade on BSV. So now BSV can handle 2 gigabyte block sizes, which of course, would you like to talk through?
Yeah, sure. So it really does go back to the whole density. If you think of the different blockchains as having blocks, which are like containers, for example, think of BTC as having a container full of air, and think of SV as having another container full of air. The only difference is within the SV container, i.e. the block, you can have air particles bounce off of each other, which puts them in an excited mode, right? And you can fit more and more particles in there because it has the capacity to fit more transactions in there.
Yeah.
And that links in with the whole incentives to actually genuinely scale. If we think of a world in 5 to 10 years time or 20 years time, where essentially we're seeing the vast majority of things like the switch of a light bulb being actually a transaction on a blockchain, you need to provide a model where you can actually scale to not hundreds of thousands of transactions per second, but even millions or billions.
Yeah.
And SV, in my opinion, and this is echoed throughout the whole firm, is the only one that can actually achieve that.
Yeah. And if you look at it from a company sense, so let's just take out the fact that, of course, it being a money and being a way to do peer-to-peer transactions of value. Now, if we look at it in the aspect of actually building a company on top of this project, which of course BSV is also a foundation. It's not just a way of me sending money to point A to point B. It's also a foundation you can build on top of this technology. This is where it becomes very important to a company on what block size is available to them and how much capacity you have to play around. Now, Christmas time, transactions peak for companies. It's probably retail companies, it's their busiest time of year. Now, 2017, I believe it was, Christmas time as well, where the network completely jarred. Yeah. And imagine you being a company at that particular time, your busiest time of year, you having the foundations that you're now built on top of completely jarring. Now, as a company, you don't want to have to worry about those things. You just want to know that the foundation is there, solid, sturdy. You don't want to have to go and check it every 2 seconds.
Exactly. Yeah. I mean, it really is interesting. And one thing that you said that I really want to pick out is the whole thing about Bitcoin being a foundation. There's a massive, massive misconception out there where people just see Bitcoin as this new form of money. What we want people to think of Bitcoin as is this protocol where it can actually be the pipelines and infrastructure where people can actually build companies on top of. Yeah. And that is really where the value is at.
Yeah, big time. And this, just to, sorry, not to jump back again, but just to jump back into the whole density thing, and just how the networks are organized in general. Of course, with BTC, the main Bitcoin, very much had the narrative of every single person can be a node. This is something that Craig Wright has been talking a lot about recently, is the fact that no, not every single person can be a node. If you look at companies within this space, so your Facebooks, Googles, not within this space, but in general. So your Facebooks, Googles, they have huge data centers that allow them to produce high volumes of transactions, end of the day, or high volumes or inputs and outputs. Yeah. Now, with every single person being a node, essentially a miner, end of the day, if you're a node, not mining, you're not doing anything for the network. Every single node should be a miner. And end of the day, if you're a miner, you should be doing something for the network. The way that Bitcoin is operating at the moment is all of these Raspberry Pis that are involved in that little node to miner cluster, are only slowing down the network. If you think of it as you having a string of cups, so like 10 different cups, and in each of those cups, you have a huge hole in the bottom of them. Now you have one cup in the middle that has a tiny hole. If you pour water through the top, then guess what happens? As soon as it hits the cup that has got a tiny hole, everything gets throttled. That's exactly what's happening to the Bitcoin network at the moment. That's why it's so important for these miners to actually be investing into the infrastructure that at the end of the day provides the hashing power for us to process transactions. With such an important job, and that is one of the most important jobs within this space, is being a true miner, you need to be invested into what it is that you're doing.
Exactly. And I think that's key when you're saying reinvesting into infrastructure that can enable you to mine, right? And there comes to a point where the incentives just aren't there. So one thing that's on our agenda is to speak about the halving, which is happening in May 2020. And if you genuinely think about that, I've got the exact block count of how many away we are. Yeah. How many?
40,965 blocks to go.
You heard it here first.
Yeah.
So if you actually think about what's happening at the halving point, the block rewards are going to decrease, right? So in order to maintain monetary incentives, the value of the assets have to double.
Yeah.
what happens if they don't? It means that miners are essentially going to be out of pocket, right?
Yeah.
Well, then you look at alternative ways miners can make money. And the only other way to really make money and accommodate for that loss is through transactions. Now, it's not through Bitcoin where you can only fit X amount of transactions in one of their tiny little Lego blocks. It's really having infinite size blocks, which is what SV is striving to do. Because with that, you get infinite transactions. And infinite transaction fees.
This is where complete token economics comes into play, because if I just bounce off that, and at the end of the day, miners have two ways of actually getting paid. One of them, of course, being the block reward, and the other being the fees attached to it. This is why it's so important to have such high density and transaction velocity with each and every single block, because it needs to be competitive, and these people need to want to win those blocks. Yeah. Now, with Bitcoin, with them minimizing the actual block size itself, you got to think of the knock-on effects that has. With them minimizing the block size, that now means that if I want to do a transaction, I've got to compete with all of these other people, which then pushes the fee higher, which decentivizes me from actually doing those transactions. So you're no longer building density within that block anymore, because you're basically telling people not to do transactions at the end of the day.
Exactly.
If I can use the traditional fiat system that's in place right now and do transactions in a much cheaper way, why the hell would I change?
Yeah, absolutely.
That is why it is so important that you need to build density within these things, because when the halving events happen, that is just a huge hit on these miners' pockets. If it's a huge hit on these miners' pockets, there's not as many miners in the game anymore, meaning that hash power drops. So even though you don't see the instant effects, like the network is starting to erode now. That is why cheap fees, high volumes, and density is the way that things need to go.
Yeah, I totally agree with that. I think what's going to be really interesting is seeing and exploring other ways miners can actually make money. So one thing we were actually speaking of is miners becoming almost like service providers, right? You can have an exchange, for example, and you can actually pay a miner to, enter a contractual agreement to support zero conf transactions. Now that's all just going to increase on the efficiency of the space. If I have a deal with a miner to accept every incoming transaction, I can allow them to trade instantaneously with the balances being settled at a later point in time. So we're really going to see miners sharpen up the whole network and create a more effective and efficient ecosystem moving forward.
Yeah, everything end of the day has to be handled on priority. And that's the way the network grows. That's the way the space advances. So it's going to be really interesting to see how these next couple of years play out. And this is exactly the reasons on why we believe that there is going to be a shift in dominance. And now it's just a matter of building in true value on the BSV network. And that's exactly what everyone's doing, because now everyone has the foundation that they need to build the companies and the tool sets to make it palatable for the world.
Yeah.
So, of course, if you enjoyed what you've seen today, hit the like button and subscribe. And bear in mind that we have always got new content coming out, whether it's blog posts or whether it's actual video content. And of course, all of the social media outlets will be linked in the bio below. So, of course, head over to all of them. So without further ado, peace and love.
Take care.